Hey guys, how's it going? So in this video, I'm going to be talking about Rocket Company making you rich. Super rich. And if you enjoyed this video, please give me a thumbs up. It'll help my channel grow. If you don't want to, that's okay too. It's up to you what you want to do at the end of the day. But I would appreciate a thumbs up for this video, because all YouTubers ask for it. Anyways, so the Rocket Company. The lowest this stock's been was 1847. This was an extreme deal. Will it drop back down to 1874? Yeah, I don't think so. But anything's possible in the stock market. I think that opportunity is over now, and you might have, you might have to buy, unless the stock market crashes. I don't see this stock going down to 1874 in the short term. But again, that's my opinion, and I could totally be wrong. And next week, after earnings report, we could see this thing drop back down to 1874. And Rocket Company might pay a dividend too. So as a long-term investment, yeah, I mean, right? It's hard for me to say anything's really a long-term investment, because I have a feeling that if Biden wins, I think the stock market is going to crash, or we're going to have a big correction, and maybe the stock market will get repumped. But for now, I think the stock is heading up higher, especially after earnings. But like I said, I don't know for sure. I don't know if earnings are going to pump the stock or not, but that's my gut feeling that tells me that the earnings report will pump the stock. I could be wrong. I could totally be wrong. And it's pure speculation on my part, so please don't follow my advice. Anyways, let's quickly talk about it. So the Rocket Company, when the IPO, they raised 100 million shares at $18 for $1.8 billion. They could have raised 150 million shares at 20 to 22 for $3 billion, but they decided to give themselves a lower evaluation. Why? I don't know. Maybe because they don't need the money, but that's just pure speculation on my part. It makes kind of no sense for them to raise, not to accept the 150 million shares at $20 to $22. I'm not an expert in this, but I mean, more money the better, but it gives them a higher evaluation if they accepted that $3 billion raise. So they wanted to raise it at 100 million shares. And I don't have the info up here, but when the stock hit around, when it IPO'd, it went all the way to $25, and then it pulled back to $18, and a bunch of insiders bought the stock around $18 to $19. So obviously there is a very, very strong support at $18 to $19, and there's a lot of money that they bought too. It's not a little bit; it's a lot of money. So I think they expect that this stock is going to head higher. I could have included it into this video, but you should check it on yourself. You should do your own research about the insiders buying. But anyways, so they are already posting an earnings report. To me, this second quarter earnings report is a little strange. Why? Because the growth on this is ridiculous. I mean, they are expecting $3.5 billion of net income compared to last quarter, which was only $97 million. How did the net income grow from $97 million to $3.5 billion? What is the story there? I don't understand it. Maybe they will disclose that in the earnings report, in the quarter earnings report. But I'm very interested to see what they have to say. And then the revenues increased to $5 billion. So that's a really good gross profit. That means that, the expenses are low. They are generating a lot of money. Because $5 billion of revenue and $3.5 billion of net income, that is ridiculous. That is so much money. That's why I think that this company is severely undervalued. And that's what I truly believe, especially if this is true, and especially if they can continue this momentum forward for the next year or so. The company will easily, like, think about it. If they were to able to just to generate this every single quarter continuing forward, in 1 year, they would generate roughly $14 billion, which $14 billion of net revenue, which is a fraction of their market cap. I mean, I think that's like a quarter of their market cap currently. That is insane amount of money. That's an insane amount of money. But according to the CEO, he's projecting $30 billion. $30 billion of revenue from a run rate of $30 billion. So he's expecting to grow from $5 billion of revenue to $10 billion, roughly $10 billion of revenue, or close to around $10 billion of revenue per quarter in the future. That's insane. I'm definitely a shareholder in this. Like, it's just hard to ignore the amount of money they're going to be generating. It is a little strange that the net revenue went from $97 million to $3.5 billion. I don't really understand that concept. I really don't understand how they did it, but I mean, can't ignore it. And then EBITDA is $3.8 billion. So that is insane. That's just insane in my opinion. What's this? Yes, the earnings report is going to be on September 2nd, 2020. So that by the time I release this video, it will be probably on Sunday or Saturday. I'm not too sure yet. And then I guess on Wednesday, after the market close, we'll see where the stock trades. We'll see, but I'm very bullish on the company, and I think that the earnings report is going to skyrocket the stock. What's this? Rocket company takes... Okay, yeah. No, I don't need this. Uber. So, let's look at Uber, right? Uber is a good example. Uber is valued at $57 billion. And how much money do they make? They make nowhere close to Rocket Company. Nowhere close. They lose money. They lose $1.7 billion, $2.9 billion, $1 billion, and they're worth what? What are they worth? $57.5 billion. If we look at Uber's future, they're gonna get destroyed by self-driving cars and robo-taxis from Tesla. Wink wink. You know, that's what I think is gonna happen in the future. AMD, if we look at AMD's financials, how much money do they make? They make $1.9 billion of revenue, and they make $157 million of profit, and they're worth $100 billion. Ooh, I don't know. That seems a little overvalued. And what does Rocket do? Rocket makes $3.5 billion. So, yeah, Rocket's a little undervalued. Just a little bit undervalued, you know, just a little bit. Not a lot, just a little bit. And AMD, I would have to say overvalued. P ratio 163. Little bit, maybe. I know, I get it. They're in the different industries. I get it. So, you can't compare the market cap because AMD's in the technology industry and the Rocket Company is in the mortgage industry. So, you can't compare the two. I mean, yes and no. But, you know, that's just me though. Bank of America, let's compare it to an actual bank where, you know, they make profits too. So this is a real bank, Bank of America. They have a P ratio of 12.54. They are market cap of $225 billion. How much money do they make per quarter? They make a total net revenue of roughly $3 billion. It can range. I mean, it was 7 billion, 5 billion, 6 billion, 3 billion, 3 billion. So yeah, and they're worth how much? $225 billion. Rocket's a little undervalued, just a little bit, and Rocket is Rocket's their competition, right? Like Bank of America is Rocket's competition, but Rocket does something that Bank of America doesn't. They do everything online, and they make it easier for agents to refinance homes easier with Rocket. So that's probably the reason why they're doing better. Anyways, that's it for my video. Thanks for watching, guys. I hope you enjoyed this. Subscribe for future updates and have a great day. Bye.